Thank you, Dr. Tiruma. Am I audible?
Yes, sir. You are.
Okay. Welcome to all the participants to this Leader Speaks series, which is one of the hallmarks of this program. Here, when you listen to the leaders like Sri Sankara Narayanan, and you will listen to their overall growth, how the banking sector has undergone the change and how they have managed the changes over a period of time, is a learning experience for all. If you see the banks in the over last a decade have completely changed, whether you call it regulatory changes, whether you call cyber security risk, customer expectations, increasing competition, or economic uncertainty, all these things have added to the issues of the banking in the evolution. One more thing which has completely changed the face of banking is the fintech revolution. So now the time has come not to compete with each other, but to collaborate with fintech companies. And the basic structure of banking, even if it has changed, but the core issue, the talent management, still remains. It is said that any bank or any institution to that extent will run well if they have the competent personnel manning different positions. So this is our AMP program is a small step toward that, to create the pipeline of leaders for the future of the banking. When the banking will undergo another radical change, maybe another 10 years, with AI playing a vital role, data analytics completely changing the dynamics of customer relationship, and new age banking moving towards the fintech revolution. So in those cases, how we want to cope up with the changes? Here, the theory is one part, but when we learn and from the experience of the leaders like Mr. Sankara Narayanan, who have seen the changes, seen how the merger happened, one of the most difficult chapters of the banking, merging various banks and creating a bigger bank like Canara Bank. So he has not only the experience, but he has also felt the changes on his own. So when he speaks, I think it will be directly from a leader speaking instead of whatever we read from the book. That is the big difference for which we want the leaders to come to you to interact with all of you. This is a time that you can interact with the leader, learn from him and learn from his experience, and we can chart our path in the growth of the banking and our personal growth also. I think I will not stand between the leader and you. I welcome Sankara Narayanan Sahab, and I will, on behalf of IIBF, I am so happy to receive you here, and for the benefit of the AMP participants. It is my proud privilege to announce that Sri Sankara Narayanan was also an alumni of AMP. That gives us not only immense pleasure, but pride to us to welcome him back to the AMP batches, to interact with AMP batches. Welcome you, sir.
Thank you, sir. Thank you. Am I audible?
Yes, yes.
Yes, sir. Audible, sir.
Yes, sir.
Okay.
Sir, audible. Yes, sir.
Very
Yes,
good.
sir.
Good afternoon, everyone, and pleasure addressing AMP. Almost 2010 was my last address to various courses in Bombay. And I used to take classes in Wellington and SAES. These were the two centers which conducted those days the AMP program for IIBF. And it's pleasure when Mr. Das and Mr. Prasad called me for the leadership address today. And pleasure to know the number of candidates who are attending the virtual meeting today. And I wish every one of you all the very best. And I'm not going to bore you with more statistics or information other than telling how banking has evolved and what is expected of a normal banker. And we all know, of course, the AMP itself would have taught you the formation of Bank of Madras in 1683. And there are a lot of closures, mergers, takeovers, everything were there. And the first bank, Bank of Madras, Bank of Calcutta, and Bank of Bombay, all three got merged together and Imperial Bank was formed. And Imperial Bank, for some time, it was handling the regulatory functions also till RBI came into existence in 1935. And Imperial Bank later on in 1955 became State Bank of India. And of course, it's a mammoth organization now. It had 7 associates, and they also got merged between 17 to 19. And now, of course, Bharatiya Mahila Bank also got merged with the State Bank of India. So, in all, the biggest bank in India is now State Bank of India, followed by the other banks. 14 banks were nationalized in 1969, and 6 banks were nationalized in 1980. So 20 nationalized banks, 20 plus 7, 27 public sector banks were in offering, plus State Bank of India. 28 banks now, if you see after mergers, acquisitions, and the government actions, we are now having 11 public sector banks.
Yeah.
Apart
Yeah,
from
go today.
State Bank of India. Can others mute the during conversations? If anyone uses mic, it disturbs me. Kindly mute your mic, please. So now we have 12 public sector banks, including State Bank of India, and the business is growing exponentially. When I joined the bank in 1983, a profit of 25 crores is a big sum for a public sector bank, whether it is Bank of India or Bank of Baroda or Canara Bank or whatsoever it is. Now, quarterly profits itself 15,000 crores. I mean, the banks are, State Bank of India is making tremendous profit figures, which were never dreamt of even in 2007, 2010 or 2015. So the business is growing, profits are growing. At the same time, challenges are also growing for the bank. And as far as the nationalization is concerned, previously it used to be some banks, they were concentrating on class banking. They were serving only to few type of customers. And the purpose was mass banking, meaning the banks were to serve for rural and semi-urban areas also. And 69 and 80 nationalization led to lot of public sector banks branch opening across India, and particularly in rural areas, which led to improvement in economy, not only in rural economy, but also in semi-urban and unbanked areas. So this led to more opportunities for the banks also in getting new customers, new business, new liabilities, and of course, new problems also arisen because government sponsored schemes, those days IRDPs and other things, led to more lending to rural areas without much of follow-up, and people were more happy in getting the subsidy and closing the account. So it was for a productive purpose, but the net result was the NPA figures. Of course, till 90, we never bothered about balance sheet on asset quality. Asset quality came into existence only in 1991 when Narasimhan Committee came with lot of reforms, including the asset classifications and income recognition. When the IREC norms came into existence, the NPAs were striking the banks in big way, and the Reserve Bank of India came with various regulations. Of course, one of the best regulators across the globe is our Reserve Bank of India. Having worked in Tokyo and Singapore, I can confidently say that the regulations in India are much more proactive, much more market friendly than what we have in other developed countries. And Reserve Bank of India gave absolute time for banks to settle down as far as classification of assets into performing and non-performing, provisioning thereof. And of course, the cycle also, economic cycles, whenever the economy does well, banks NPA reduces. Whenever economy fault is the NPA goes up. But whatever said and done, overall, the current situation of the banks have been splendid. Actually, last 2 years has been exemplary. The overall business growth has been somewhere around 12 to 15%, depending on individual banks. But profitability has been marking a striking performances across banking sector, whether it is the public sector or private sector. And NPA figures, asset quality particularly, which were on an average above 6% for most of the banks, gross NPAs. Now they are below 4%, and net NPAs are definitely below 1.5 to 1%. And some banks have come below 0.5% net NPA also, which is definitely a good sign. And during those days, I'm talking about early part of nationalization and up to 90s, we never even bothered about capital requirements. So whatever it's government holding were there considered as capital, as in asset classifications were not there, provisional requirements were not that difficult as far as the banks were concerned. Overall, banks were happy in showing numbers. They were very happy in showing what is the increase in deposits, what is the increase in advances, rather than talking about capital or other ratios. Return on equity, return on assets, return on capital. These were the issues which were not even discussed till the start of current millennium, 2000 only, we started talking on those segments. Till such time, we were only bothered about the size of the balance sheet rather than the quality of balance sheet. Then what happened? Narasimhan Committee gave opening for private sector banks into Indian market again, which led to ICICI and HDFC. Both both got licenses apart from Kotak, Axis, then IndusInd. Many other private sector banks came into market, and this led to qualitative. They came with technologies right from day one, 94, 93, 94 itself when they got licenses. They had the advantage of first technology, then the business. Whereas Indian banks, we were from manual intervention in any bookkeeping. From there, only in the early part of 2000, we started computerizing the branches. So the technological development way back in 2000 led to core banking. From branch banking, we moved to bank banking. And this has really helped the customers operating, whether you are in Delhi or Dehradun or in Dindikal, you can operate any account effortlessly of any bank. And of course, the internet, and which gave options for internet banking, mobile banking, and technology gave options for customers to deal with banks in much better ways than what they were doing earlier in manual system. In earlier system, you have to necessarily go to your branch to do your debit or credit transactions, whether you deposit or you draw. You require a branch visit compulsorily. Nowadays, you don't require even to open an account. People will visit your house or office, and effortlessly over a tab, they can do the account opening and business can be transacted effortlessly. So things have changed quite a lot, right from early 60s to current 2020. And whatever be the changes, the banking has not changed at all. Banking means by definition, you accept deposits for the purpose of lending. And as per regulations, you have investments. And if you accept deposits of 100 rupees today, by regulation, you have to keep SLR of 18% minimum, 4.5% CRR. That means roughly around 25% go for regulatory requirements. You are left with 75% to lend to various segments. And even in these segments, you have regulations. Like priority sector, you have to direct agriculture lending. the other priority sector lending, all put together, you have to comply with various RBI directives, irrespective of whether you are a private sector bank or a public sector bank. These requirements, of course, in those days, these were all priority sector advances of public sector bank used to be 50-55%. Now they are playing between 40 to 45%, but in agriculture lending, they are direct agriculture 12%, both including indirect, they are at around 18 to 20%. All put together, the focus is on not only is on corporate credit, but also on agriculture credit and industrial credit. And the growth has been spectacular in all segments of banking. And I always used to tell the banks wherever I work, Bank of India or Vijay Bank or Canara Bank, for doing a sensible banking, what you require is basic 8 standard IQ and common sense. Of course, the BA, BSc, post-graduations, MBAs and other things will give you confidence to handle situations depending on the challenges, what it comes on. But to do a banking, a basic banking, you require a simple logic of 8 standard IQ, and you can definitely do a better job with graduations and post-graduations. I'm sure all of you with AMP would have gained more knowledge about banking. You can excel in whatever challenges, irrespective of liability side or asset side. You should be in a position to manage the entire segments of banking effortlessly going forward. And the question of SLR and CRR. Number one, RBI, I should not use the word, they don't pay interest now on CRR, but they get funds at 4.5% to 5%, whatever cash balances of, deposits, NDTL, they get as deposit with Reserve Bank of India in current account. And number two, SLR, it is required to fund the budget deficit. In developing countries like India, any budget, whether it is state budget or central budget, we go with deficit financing only. We are sure about our expenses. We talk about estimate of incomes only. Whereas expenses are well defined and known to everyone, right from department to department, and they are certain to be spent over a period of time, over a period of 1 year. And the revenue, whatever the government depends is on direct tax and indirect tax, and net of expenses, they will be having a deficit, and this will be borrowed. This will be funded by borrowing, which is facilitated by SLR of Reserve Bank of India. SLR can be both under central government bonds or state government bonds. And these bonds, all banks are supposed to invest at any point of time. They have to keep minimum 18 to it. Normally, though we call it as 18%, many banks, depending on the market conditions, they keep between 20 to 23%. And CRR, of course, we have no other option but to keep 4.5 to 5% with the Reserve Bank of India. So technically speaking, you are blocked with 30% of your funds with regulatory requirements, and you can comfortably lend up to 70%. And of late, you must be seeing Reserve Bank of India and Governor warning the market of deposit growth. Last 3 or 4 years, banks' money, particularly current and savings account, the customers have moved confidently to mutual fund and stock markets. And keeping this in mind, the customers need to be, when SLR has to be kept in, 30% goes for regulatory requirements, remaining 70% is with banks for lending. And this also of 70 rupees, whatever you lend, 40% must go to priority sector advances, and remaining amount is left with you for corporate lending. So, as a bank, you are the planning department requires proper understanding of the market, not only on liquidity resources and the potential growth prospects in various segments, whether it is agriculture or industries or small business or corporate credit. One should have clear understanding of market growth prospects in all these segments and decide on which segment to concentrate and which area has the potential to grow with least of delinquencies. And the banking, the products are same, whether it is 1960s or 2024. On liability side, you have same three products: current, savings, and term deposits. CASA and term deposits are the only sources of your liability side. On your asset side, you have cash credit, working capital, term loan, and bills, and also non-fund based business like LCs and guarantees. So overall, the growth of the bank. So any segments, there may be modifications in the current savings account. They can be sweep account. It can be senior citizens account. It can be share. There's a trust, societies, associations, and clubs account. You can name it anyway, but the basic concept of account has never changed, whether it is 60s or 2024. So, on product, one should be very clear about what are the products available in banking. They should have clear knowledge, number one. Number two, the process. One should know how to open an account, what are the requirements, whether it is regulatory requirement or bank's requirement. One should be very, very clear at the time of opening account itself, including KYC, compliances, and all requirements of the bank and regulators must be met ruthlessly at the beginning itself. And third one is the pricing. Of course, it is a dynamic one. Depending on till late 90s, the pricing was decided by Reserve Bank of India. They used to give the interest rates both on deposits and advances. The life was much simpler and easier those days. And later on, when with the reforms, when they gave the options to the banks to fix MCLR or prime lending rates or interest rates on deposits, banks felt difficult for some time, but nowadays they look at the leader and fix the rates across the banking system. But it has led to unwanted competitions or unwanted cutting of interest rates also. Actually, the interest rate should reflect the fundamentals of inflation and the supply and demand. And sometimes what we do, I have seen even in some private sector banks, the deposits are priced somewhere close to 8%, whereas some corporate assets are being priced around 6.75 to 7.5% also. Maybe duration may be for 3 months or 6 months, whereas that may be for 1 year or 3 years liability side. But the essence of banking, you do business, you accept deposits for the purpose of lending. And with today's competition, you should also remember you have accountability for the not only for the investors, stakeholders, staff, and your customers. You should know to make profits on each and every transaction, irrespective of whether it is a deposit side or advances side. Competition is good, size is good, volumes are good, but overall, the business should result in profit for the bank. But anyhow, it is individual banks to decide their pricing, whether it is corporate credit or agriculture credit, whatever way you do, the final impact should be profit for the bank, for it, profit for the organization. And the volume should sustain for a period of time with increasing in profitability. And people, way back in early 60s, it used to be a direct recruitment, then BSRB came into existence, then IBPS came into market. But whatever be the recruitment, whether it is lateral recruitment or direct recruitment or through systems, finally, what is required is proper training of people for the various jobs required for the bank. The basic problem is we presume if a graduate comes and sits in the counter, we presume that he knows everything right from A to Z of banking. And that's where the banks fails as far as the product is concerned, pricing is concerned, process is concerned. Because if the people or the staff members are not properly trained or educated, the whole purpose of banking and products becomes useless as far as any organization is concerned. So this type of AAP courses also help in educating people on various product process and pricing, and they will know what the other competitors are doing, and they can use it more effectively in their parent bank for the betterment of the industry, institutions, and the country. And the technology has its own advantages and disadvantages. Today, from branch banking, we have moved to bank banking. Anyone sitting in Kanyakumari person can have access to an account in Kashmir, and he can operate any account effortlessly. And that gives the accountability or responsibility to the management that what authority you should give to a person sitting in a rural branch, operating an account with an urban or metro branch. And if he decides with another person, or if he is having access to another user ID and password, anything can be done in banking in a advanced technological support what they have. And I should go back to 80s again. Those days when we joined the bank, it used to be manual, totally manual operations. And we used to, any customer coming, starting from account opening to his deposit of cash, the posting of those vouchers into ledgers checking in the evening, next day preparing the day book, checking ledgers, day book to long book to day book to GL, GLB, everything used to be manual. And not only that, every month or every week, they used to jot the accounts and balancing. So 90% or 80% of our efforts were on housekeeping rather than on business development. Thanks to computerization, all these headaches have been removed. But at the same time, the controls have been lost in technological development also. During those days, while flipping through the ledger, when I'm seeing a transaction in a dormant account, if there is a debit of even 10 rupees or 100 rupees, I used to check why that transaction happened, how it happened. I used to call for the account opening card and check whether the concerned person has correctly signed, and check with the cashier and the accounts ledger clerk whether they have seen the customer operating the account and why it was dormant for so much time. Nowadays, in system, anyone has the authority to authorize operations in operative account or inoperative accounts. And if you have innovations, either from new staff or existing staff, you run the risk of exposing the bank to greater risk. The frauds do not happen only from external agencies or fraudsters. It can be, you should not give any room for your own staff to innovate things in any segment of banking. This is the major challenge what we have as far as current banking scenario is concerned. Technology is wonderful. Technology has led to business development, Technology has led to customer satisfaction and customer delight, but technology is exposing you to greater risk and responsibility. So my request to you all is sensitize people not to share their password. With normally, I was told in one branch they used to keep a passbook to enter what are their current passwords, so that even if one person is absent, the other staff can operate the account and facilitate customer transaction. This is not intended at all. Any transaction should have maker-checker concept in banking, particularly in any financial segment, and it cannot be compromised in banking, and particularly in any bank for that matter, whether it is public sector or private sector. And more than sharing the password to the colleague, some of the business correspondents, some of the customers themselves, I was told, they operate bank systems and we freely give accounting. You must be aware about 2017 syndicate bank fraud, that LC, which was opened, fictitious bills were transacted in Rajasthan. This is mainly due to permitting the company staff to enter all the accounting through banking system. The customer himself entered all the transactions, whether it is bills or discounting or creating an account or transfer or whatever it is. They have outsourced everything to the third parties. Nowadays, outsourcing is acceptable as far as some non-direct banking activities are concerned. But outsourcing the transaction module itself, it is deadly for bank or it is dangerous for any individual operating in any branch. Kindly take care of this. From controls, again to extend, maker checker, I said, but the system generates exceptional reports every day at the end of the business EOD. You get exceptional reports which gives you interbranch transactions, exceptional transactions, dormant account transactions, and overdrafts or loan sanctions or dispersed. Everything comes in a nutshell to the branch manager. It is not even seen or ticked or checked. And even in audit, previously it used to be surprise audit by inspection and audit department. Nowadays, before audit, the initial reports, audit exceptional reports are sent to branches for peer compliances, so that when actual audit happens, it will be bare minimum for compliances. But the branch people take audit also casually. They said it's one more routine for the bank. Why I should waste my time on that? So please do not treat the lay down procedures policies for wind. Follow the procedures more meticulously, particularly take things more seriously. Otherwise, whatever risk management department sends you circulars or compliances, it all will be only in paper. And finally, when Reserve Bank comes for yearly supervision, the review of the bank, overall rating of the bank depends on overall quality of the bank, not only on business parameters, but also on control parameters. Nowadays, control, risk, compliances, and your quality of balance sheet, they have been closely monitored by Reserve Bank of India, and that's why your CFO has been selected even from lateral recruitment, or SCA has been recruited as a financial officer, chief finance officer. Risk management, you require basic knowledge of all the types of risks which are available as far as the banking is concerned. And compliance officer should know the entire segment of banking before moving into compliance, so that he is the person of point of contact, not only for Reserve Bank of India and other regulators. And he should know what is happening, what is the controls. He should red flags if he gets immediately to update EDs and MDs to avoid any surprises or shocks later on for any bank or any organization at any point of time. So the banking is evolving as told by Mr. Das. It is what is today's banking will not be after 10 years. Only process may change, but remember the products are same. You have only 3 products on liability side and 5 or 6 products on asset side. It may be agriculture, corporate, retail, and industries. So beyond this, it may be of various. Previously, we used to have bill discounting through papers. Now we have threads and other methods also coming to the banking system, which gives you more flexibility to do better business, quicker service to the customer. But you should not lose sight of controls at any point of time. Whether it is on liability side or asset side, please take care of the controls. And controls, when I say, it is not only on operations, it is on HR. In HR, I should quote only one case in one of my earlier banks. I got a call from ATS, anti-terrorist squad of that particular state. They said, sir, we would like to have you in our state tomorrow. We have an urgent message to you. So I went. They said in a particular remote branch of your branch, there is a staff member who is not selected by BSRB or IBPS. All the IDs have been fabricated. Kindly take care of his credentials. And we have nothing to comment on your bank, but the confirmation of the staff requires immediate due diligence. So I asked my HR department. They said, sir, no, sir, we selected that person. It was identified by IBPS. We have checked this PAN card. We have checked this address proof and other things. Whatever we have said, he is correct. Then I asked DSM to go and check the transactions in the branch. Random check, suspense accounts, and the GL accounts. He found the mistake of somewhere close to 1.5 crores. Initial random checking sitting in manager's cabin. Then whatever system I said about that one passbook was kept, all the passwords were compromised. And this fellow, being from new generation, he used to keep a pen camera at the back of every computer, and he could read the password even if it is not shared in the passbooks. So he knew every user ID, every password of all the working staff in the branch. There were hardly 4 staff members in the branch, but he had full control of that. He used to come early to the branch. He used to leave late from the branch also, scale 1 officer. And he opened a current account. You will not believe a branch of 10 to 15 crores business made. He has siphoned off 12 crores effortlessly in 3.5 months' time. That shows the strength or weakness of our system, our IT department, our HR department. How we have done is from a state which is that time it was under the watch category state also. Appointment was done and he was posted to a branch in central India, and the mail was intercepted. Photos were changed, similar name, ID cards were prepared, that is PAN card and Aadhaar were prepared. And we understood that original candidate whom we selected, he was killed, and this fellow came and joined the bank. And all the amounts were siphoned off. It was, we call the AML CFT, this was clear case of CFT. terrorist funding, countering the terrorist funding. It is the best case as far as the bank is concerned. And of course, the alerts, what has been sent, were overlooked by compliance department, and they were all presuming it is matter of routine. The business of the branch is not changing, but he was using the business of other banks, including GL and suspense accounts of other branches, and including the clearing accounts, whichever account possible he has transacted and siphoned off. And at the time of boarding the train, he was caught by police, and we could recover about 60% of the amount. But out of 15 crores, 12 crores, even if 40 means around 5 crores have been lost by the bank by that time. This case, I am talking about around 5 to 10 years back, but still, it is, you cannot repeat the same mistakes in all the branches, all the banks, to learn things which should be avoided. You should. That's the reason RBI sends you, and IBA also sends you, shares the various frauds committed at various branches and various branches, only to educate you, not to learn from it. And the control systems, when I am telling, we have stopped checking the accounts, whether it is a liability account or an asset account, because everything is done through system. The inspections are not properly done in advances account. We remember the accounts only when it is overdue or due for review, and only for namesake an inspection is done and entered into the system. And cash department. When I say cash, it includes ATM. Previously, I must share one excellent control system which is followed in an associate bank of State Bank. State Bank of Mysore, when they come for audit or surprise inspection of cash department, they will not check the opening cash or closing cash. What they will do is, they will go to payment cashier. They will at random pick up all the denominations and put it in a cover, seal it, and ask second cash person to handle the payment, and ask the first cashier to balance and tell the difference. And up to the last PC, we even they don't allow variation of 1 to 2 rupees. 1 rupee is okay, but if it is in rupees, definitely the concerned cashier will be charge sheeted, and appropriate punishment will be given as far as the payment cashier is concerned. As far as the receipt cashier is concerned, they will go to, if 3 receipt cashiers are there, they will go pick up cash at random. It is like without any denomination. It may be 100 rupees, 500 rupees, 1000 rupees, or 20 or 50, whichever currency is available, they will pick up, put it, seal it. Evening, he has to tell him what is the total cash received, what is the difference he has now. So the sealed cover must tally with the difference, both in payment as well as in receipt counter. This is the best way for checking a cash department rather than checking the opening cash counter or closing cash counter. That is not checking at all, because you must be aware, way back in early 80s and 90s, the cashier used to give, if the cash requirement 2 crores, for example, they used to draw 4 crores from currency chest, and 2 crores they used to lend for intraday for various trading entities. At the end of the day, with the interest, we used to collect back. So far, things were going good. Things are good because opening cash is checked, closing cash is checked. There is no difference, no problem. One day, cashier missed because the person trader who took the cash never returned. This fellow went and committed suicide. The bank lost 2 crores. So this is only an example I am telling. This type of innovations do happen in any financial sector. It can be an NBFC, it can be a bank, it can be anything for that matter. Similar control is required on ATMs also. Normally in ATMs, we feel system is doing it. We don't have control on reconciliation. We don't control on what amount we have to pay, what amount we have to receive, what amount the cash balance has to be there, whether it is opening balance plus minus payment, the closing balance we have to check on an ongoing basis whether we are doing it or not. It is the currency just used to give cash left, right, center to a service provider. And I must tell you, in 2015-16, IOB Coimbatore, they lost 380 crores just because they were not tallying the reconciling their currency given to the ATMs. This can happen to any bank, any ATMs. If you don't have a proper accounting, reconciliation, and controls, this is another segment you are open to a lot of risk. And these things, of course, it has been circulated widely also. Kindly take care. And the volumes should commensurate with profits. The setup of banking nowadays, what we have is we have government, the finance ministry, Department of Financial Services, Reserve Bank of India, below Reserve Bank of India, various departments control all the financial sectors, including banks. And in banks, we have board, which is the supreme control. Board controls the management, which is headed by MD and CEO and the executive directors. Then you have departments, various general managers heading that. Below that, you have various zones or regions and branches. See, more than this, previously this used to be the setup. Now RBI wants controls on compliances, controls on risk management, controls on governance, and also on your accounting. So when all these things, the board, ACB, audit committee of the board, they directly interact with these executives. The general managers who are heading this department, they are called for clarification, they are called for compliances, they are called for controls, they are called for reviews, and they are called for directives also in various boards of various banks. And though we have public sector banks, private banks, and foreign banks, in all the banks, also small finance banks and post office banks, everything, the systems are same, products are same, controls are same, the processes are almost same. You may have different computer systems, but one may be having TCS, another may be having Finacle, another can have any sort of operating system, but you should ensure the systems are foolproof. Because in some of the systems, some of the foreign banks are some of the foreign banks, I'm talking from what I have seen in Singapore and London, the accounting, the basic accounting is structured through suspense account and GL accounts. This is deadly for any bank. Yeah, I'm not talking about Finacle or TCS. The system what we use in HDFC and Canara Bank, the basic system, it evolves from GL and suspense account. Any transaction, for example, in normal banking, if I am paying amount to Mr. Das, I am having savings account, Mr. Das is having current account, for example, my account is debited, Das account is credited. In suspense account related entries, what they do is savings account of mine is debited, suspense account savings is credited, suspense savings is debited, current savings is credited, current savings is debited, and current account of Das, Mr. Das is credited. This leads to unwanted responsibility of officials to check the suspense entries first before starting to balance your current and savings account. Because my account is debited, Mr. Das account is credited. Both of us know what is the cash flow. But what has happened in between suspense current and suspense saving, this leads to innovations, this leads to frauds. So whichever bank has this type of accounting entries, who believe on opening left, right, central suspense account, left, right, central real account, kindly exercise caution. And the system, I must talk about giving responsibilities of managing IMPS or your any transactions QR or anything for that matter. Through NPCA, everything is happening seamlessly. But in IMPS, if the account number differs or account do not exist, automatically the fund gets rejected. And all the transactions happen through GL account. And normally when I remit through IMPS from my Canara Bank account to Bank of India account, Canara Bank account is debited, Bank of India account is credited. For example, the account do not exist or whatever happens, the funds gets returned back. The system, these transactions, one of the staff members, we understood more effortlessly. He put a, what they call it as, at the end of the day, at the beginning of the day, he will remit. At the end of the day, he will put return for all those remittances which are pertaining to him only. It used to go back. And this type of transactions in my earlier bank has resulted in a fraud of 1.5 crores. Scale 1 officer, new recruit, hardly 6 to 1 year service. And IT specialist, we believe whatever happening in IT system is going perfectly in order as far as the banks are concerned. So anything for that matter, you require HR again comes into picture. It's not training alone. It is rotation of staff, integrity of staff, posting right people to right places. And this is what I used to say, the selection of GMs and DGMs, it is the direct responsibilities of GM, EDs and MDs. And Alexa, stop. And the once it is done, selection of right GMs and DDs are there. I mean, GMs and DGMs are there. The posting of them to the right zones and assignments, it is again the responsibility of the top management. And coming to the region, the posting of selection of managers and sensitive posts, including credit, it is the duty of the respective zonal managers to ensure you should know the integrity of people before placing them at right positions and should plan for proper succession planning also. It is easy to say, but very difficult to implement in any bank or organization. Kindly ensure your bank, whichever bank you represent, takes care of these basic requirements of knowing your staff. Knowing your customer is easy. Knowing your staff is equally important for long survival of any organization, including our bank. And inspection and audit plays equal responsibilities. Please understand, when you rate the bank, rate a branch as low risk, high risk, medium risk, you are not rating the branch alone. It is not on business parameters alone. It is on control parameters. If control parameters are thrown to winds, it is the basic defect of the concerned branch manager or the officials at the branch level. If transferring him from X branch to Y branch is not going to solve that purpose, mark those persons. Normally, we used to keep agreed list as far as the staff members of poor integrity is concerned every year. Similar list you should keep for people who make branches high risk, and you should not give them any sensitive postings like that. This is because most of you are agents, DGMs, and you are all going to grow up more in the cadre. You should know what you are doing. You should know your job. You should know your bank. You should know your policies. You should know what are the products available, what are the prices available, what are the risks associated with those products, and you should know the mitigations also perfectly in control, so that the organization and banking surveys not for we have gone through many failures in banking, but thanks to Reserve Bank of India, right from 1960 to date, there is no bank failures. Even if there is a failure, they are all properly addressed. No depositor has lost any money as far as banking system in India is concerned. It is not the case in US or any other country. When Lehman failed, all the investors lost their money. But that's not the case in India. Even when PMC Bank collapsed, Unity Bank took over it, and all the deposited interests were taken care. So this is one example I'm giving. Many such cases are there, and you should have, as an executive, what is required from is the basic management principle. You should know what is to plan, how to organize it, and make the right staff. What I said for HR function, do it properly. Have proper decision making or direction. Then you should have proper control, coordinations, and communications, and regular review of your operations is required. And budget. Budget is not for future budgeting. You should know what is the budget you have given and how much has been achieved. And you should know to differentiate between apple and an orange, and give the best recognitions to the persons. Because, for example, a branch in Delhi cannot be compared with a branch in the local. Same case, a branch in Chennai cannot be compared with a branch in rural branch in Kochi. So you should know how to differentiate the potential areas and how to differentiate between the persons operating at various places. And the APR exercise, annual performance review, must be based on not only on contributions but also on potentials. Promote right people, place them at right places. You will not fail in any of your executions, particularly as GM, ED, or MD, or in any board positions of the bank. And from your end, what is expected is decision making. Decision making do not mean you should say yes to all the proposals, yes to all the suggestions. Please understand, no is also a decision, which can be given instantaneously. If a proposal is not suiting your bank, not suiting your requirements, confidently say no to that proposal, so that customer can go to some other organization or some other lender and get things done. So time is essence. Turnaround time is not just number. It should be practiced in total. And spend your time meeting your staff, number one, whether it is a sub-staff or clerical staff or officers in any scale, meet them without any appointment. And when customers come to meet you, give top priority to them. 60% or 80% of your time must be spent on meeting your clients. Then only your business will grow, qualitative business will grow. And 20% you spend on clearing the files. Because as GM or a department led or ED or MD, I'm presuming all of you will be heading an organization one day in near future. So spend 20% of your time in clearing the files, but your sixth sense should prevail to say yes or no without any hesitation. Never carry papers home. Clear the papers. See, 10 to up to lunchtime, meet as many customers, as many staff as is possible. From 3 to 5 also you give time to your customers. From 5 to 7, clear all the papers. Do not carry anything home. Spend your time more productively, more positively at home rather than taking the papers and passing the pressures to the family of whatever homework you are taking to the office work. Please do not take home at all in any segment that is not required at all. And I am sure you all will succeed and look forward to see you all in number one position soon. All the best to you all. Thanks for patient hearing. I think I have taken more time than what has been allotted to me. And thanks again to IIBF for giving me this opportunity. And wish you all the very best. And time permits, we will meet you all one day in corner room as chief executives of various organizations. All the best to you all. Thank you.
Thank you so much, sir.
Thank you, sir.
Thank you, sir.
Thank you so much, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you,
Thank you,
sir.
sir.
Thank you, sir.
Thank
Thank
you.
you, sir.
Thank you, sir.
Thank you, sir.
Thank you. Thank you, Dr. Sundarama. It's wonderful to hear to you. In-
Any questions if you want, please. I think we can spend next 10 minutes on that.
Dear participants, you may interact with the speaker. When you are interacting, please switch on your videos and also audio. Thank you.
Sir, here Sagar from Central Bank of India, sir. Sir, in coming days, sir, there is a very two big challenges to banking sector, sir. NPA and cyber crime, sir. To meet the cyber crime, sir, we are day by day gradually increasing our technology. But for NPA, still we are on very threat side. So, sir, what is your opinion, sir? So to meet the NPA, what should we do, sir, effectively, sir?
See, on non-performing assets,
Yes,
if
sir. Yes, sir.
if you meet the customers at first, at the time of sanctioning itself, the meeting customer, visiting his place, knowing the customer, and getting the references from your good customers, that can give you a right feedback on any customers for that matter, whether it is a small loan of 1 lakh or big loan of 100 crores. You should do the due diligence properly. Do not believe only on the balance sheet or published data alone. You should know how to get the feedback on individual customers. Talk to the competitors, talk to your own customers. They will give you better feedback on that customer rather than after sanctioning, do the follow properly, follow the early warning signals, and even after that, if the account goes bad, there are a lot of ways for recoveries. Of course, NPA is any advance for that matter when you lend, the probability of it becoming NPA is 50-50. So don't go with probability alone, but have the account secured with appropriate collaterals, appropriate primary securities. Please ensure it is all properly secured, whether it is at a branch level or at corporate level. Please ensure the terms of sanctions are complied. If you follow your own sanction conditions properly, the probability of losing in an NPA account is 30 to 40% only. At least 60% you can recover confidently if you have followed the terms of sanctions correctly. So on IT, while we merged Dena and Vijaya Bank with Bank of Baroda, and also Syndicate Bank with Canara Bank, the major two issues were people and technology. Technology, if it is same, of course, it is not just overnight copy paste the data and you start the new bank. It's not that easy what we think. It requires a lot of involvement at branch level, regional level, bank level, and I'm sure the systems, your IT people take care of the controls, not only on the business continuity, but also on the quality data centers and the attacks. Now, whatever innovations happen, external threats, including recently patch on cloud system, it stopped the airline industry for almost 3 days time. So we are vulnerable to those conditions. Only thing is, please ensure you should not be reactive to these situations. You should be proactive, meaning you should have mock run of various types of possible attacks and ensure how to overcome it. And you should have your disaster recovery more effective. And I'm sure all the banks, whether it is Central Bank or Bank of India or any other bank for that matter, we have good IT specialists in the banks, use their services, have external advisors if required, and ensure you have absolute foolproof system to avoid any sort of threat at any point of time.
Okay. Thank you, sir.
Good evening, sir. Thank you for insightful session. When we say the future banking, we see the Indian banks have a potential to become the global leaders. But simultaneously, however, when we see the growth, there are some challenges which we may face. So what kind of challenges do you see in future?
The growth, it's directly related to the economic conditions. If there is a good GDP, the banking growth is bound to be there, and India's growth story is intact compared to the all other countries, including China. We are much better placed as far as the economy is concerned, and also banking is concerned. And we are not like any other country. We are absolutely transparent in system. That's why the audits and the provisions and IRACs and other things, whatever international systems are there, Indian banks also, thanks to again regulator, I must compliment RBI for proactive steps. The Indian banking, as far as the balance sheet is concerned, you can be confident that we will not be vulnerable to a situations like what happened in the US during Lehman crisis, or subsequently recently also they had a run through. But I will not call we are insulated, but definitely we are better off. And coming to Indian banks becoming world-class level, it will take more time. It will not be in next 10 years, but definitely going in next 2 decades, you can be very, very confident Indian banks will have the size of international banks. Of course, in top 10, we are not there, but definitely State Bank of India is reckoning to that. Their performance we must have seen and watched. And not only State Bank, we must have seen the performance of Canara Bank or Union Bank of India or PNB or for that matter, all the banks, they are now heading above 5,000 crores, which was a dream some 5 years or 10 years back. It was of course, we never believed that a public sector bank can record a profit of net profit. I'm talking about 15,000 crores or 10,000 crores, which we used to have a campaign like Sankalp 10,000, meaning achieving 10,000 crores operating profit by 2015. This used to be our vision in Bank of India when we had McKinsey giving us ideas for reorganization. But whatever be the numbers that time, but I must compliment the Indian banking system, whatever they have gone through between 2015 to 2020, including COVID period. The banks have come out very well from average NPAs of 6 to 9%, bringing it below 4%. I'm talking about GRAS. Below 4% is an excellent number from international standards also. And having net NPAs below 2% is again a commendable job from all public sector banks and private banks. So banking is function of economy and GDP. and let's wish country does well. Let's have more sensible growth in all segments possible, including agriculture and industries. When they grow, the NPA problems will not be there, and we will have better days to have better results and better policies. So, best wishes.
Thank you, sir.
Thank you so much, sir.
So my query is related to something that you already said in your initial speech regarding your deposit growth of banks. So how do you think banks going forward will take up this challenge of deposit growth? Because I think the RBI also has raised certain queries regarding the deposit growth. So what do you think, according to you, is a medicine to solve this problem?
The Indian market is basically saving-oriented market, whether it is 60s or current market. So people love to save, then spend rather than spend and save. Of course, newer generation I'm not attributing, because nowadays people spend, then use that American culture of credit card and usage of credit. It's now picking up faster also. That's also a factor which RBI is a bit worried about. But frankly speaking, in last 3 years, the money has moved from banking sector to the mutual funds and stock market. Otherwise, despite so many challenges to the stock market, particularly whether it is Indian banks or whomsoever it is concerned, whatever happens, the market goes. The retail market support is supporting the Indian market beyond the expectation of international investors also. So, in a developed market, so see, if you want a developed market, you should have developed equity, mutual fund, and banking and insurance. All put together, all the segments should grow in a financial segment. So you cannot wish away them from participating in growth. But when you are asking about bank deposit growth, now it comes to individual banks quality only. See, when you have a good customer service, counter service at branch level, the loyal customers will definitely continue to bank with you, whether you are paying 5% on SB or 7% on SB or 3.5% on your savings bank account. They are not bothered about interest paid, but they are bothered about the quality of service which is offered at the counter level. And as far as Indian banks are concerned, current and savings, they constitute the major portfolio. Of course, the range may be 25% for some public sector bank or private sector bank, but can be as high as 45 to 50% as far as State Bank and PNB or Bank of Baroda is concerned. It all depends on the mix what you have, customers, government, and other task accounts what you have. So concentrate in all segments of customers. Deposits, earlier it used to come, we were banking on walk-in customers. Nowadays those comfort has gone. Some new generation banks are going, almost they are having building to building, society to society, they call meetings of all the residents over there, offer special services including credit card, debit card on the spot. So those type of services can get you more deposits. But finally, what happens is it is not the interest rate, it is the quality of service at branch level. At when a customer comes to you, how you treat him makes all the difference. Kindly ensure you attend to the customers properly and motivate your branch managers also to attend them properly. You can achieve better growth. Of course, there is RBI's current directives is also aimed at when advances are growing at 15%, 12 to 15%, banks are growing in credit, whereas deposits are growing only between 8 to 10%. It may be wantedly or it may be due to individual banks' qualities, but the system is growing around 10% on deposit, 12 to 13% on advances. Naturally, when there is a lag, you cannot depend on your treasury, cannot make magic out of when to run the shortfall. Interbank borrowing, CDs, CPs cannot help you in managing your portfolio. So one has to plan on long-term resources rather than on short-term borrowings alone. So sometimes some corporates also follow this method of funding their long-term requirements through short-term borrowings to have advantages of interest rate offerings by various banks. But this will not stand, particularly with the current RBI directives. Please take care of your asset liability mismatches and ensure do not commit anything long-term without any 1 year or 3 year deposits. And of course, banks are paying somewhere between 6.5 to 7.5% as interest rate. Technically speaking, with current inflation rate, normally till RBI, I'm talking about till 1999 or 2000 when they were fixing the rate, they used to take your 10-year GSEC rate plus 1%. This used to be the deposit rate for 1 year deposit. I'm talking about your FD, what you are offering to your customer. This used to be the formula followed by Reserve Bank of India till they gave the rate. And even some banks, after the interest rates were decentralized, we were giving. Now only we have become more, what I should say, profit oriented. We are not properly pricing on liabilities. I'm not talking about today. Even when I was MD of 2 banks, I also did, because money what you save is money what you earn. So that greediness is always there. Tide over the greediness, offer the right rate, and try to retain the customers. And of course, Indian markets, stock market also gives them shocks once in 10 years' time. And we have seen ILFS, we have seen DHFL, we have seen many episodes, Akshat Mehta's, Ketan Parikh, and whatnot. So whenever that happens, they come to banks, come running to banks. Even if you offer 1% interest rate, deposits will come. So it is not rate sensitive. 80% of your deposits are not rate sensitive, but it is service sensitive. So make your branches, when you become in charge of resources, ensure your services are proactive rather than reactive. All the best.
Thank you very much, sir. Now
Sir,
we
one
will
last
request
question,
our,
sir, if your time permits. I'm really sorry.
we will take only these questions if
Yeah.
the speaker.
Sir, thank you for your wonderful session and sharing the experience. It is not as a person, and it is 35 years of experience is sharing the experience with us. And while RBI has fixed the lending criteria like a priority sector lending, etc., to support the economy and to fulfill the social objectives, is there any such criteria for accepting the deposits, sir? Why, like, they have not fixed any criteria that you should have this much of customer retail deposit, this much corporate deposit? Is there any rationale behind this, sir?
There is no directive, but you have a ALCO, you have a risk management department also. Their duty is to analyze the mismatches in various buckets. So RBI do look at that when it comes to inspecting your bank. They will be looking at all the buckets of your resources. How much you are having in current account, how much you are having in savings account, how much deposits you are having it in 1 to 7 year bucket, and behavior study also they do. How much deposits get renewed on automatic basis, and how much deposits go for premature closures, how much deposits are rate sensitive, how much customers keep deposits on long term basis. So these items are discussed in your risk management on sources and uses of funds at regular intervals. And of course, Treasury is also equally involved in this. They will be updating on whether RBI is borrowing the funds. I mean, banks are placing surplus funds with RBI, or banks are borrowing from RBI in repo, or they are keeping money in reverse repo. These are data are available on daily basis in RBI site. this information aligned with the market liquidity, the borrowing capacity of each and every individual bank. That gives confidence to the management and also to regulators. If the bank can tide over situations of adverse conditions. And as far as RBI is concerned, I can again tell, in stress conditions, particularly after Lehman 2008 episode September, they told some of the big public sector banks like State Bank of India, Bank of Baroda, and Bank of India to lend to any bank, whether it is private sector or public sector, even beyond the limits. So we have individual exposure limits on individual banks. For example, on ICICI Bank, if we had X of hundreds of crores, thousands of crores, for example, if they required 3,000 crores, RBI said, we will support you, you please ensure you support them. So this is the proactive way. That's why I said we have a regulator who are proactive rather than reactive. So they know what will happen to the market, and with that happening, they actively support the market also depending on market conditions. And actually, I forgot to update you. Thanks to Bank of India, I was in Treasury for 21 years, 1989 to 2009. So I know how positive our regulators are, how positive the market is. And one should realize market is bigger than any individual. Market is bigger than any organization. If you have that concept, market will support you at all times. So even if you have mismatches, short-term mismatches between assets and liabilities, market will come to your rescue to assist you to fund that requirement.
Thank you very much, sir. Now we request our director, sir, Shri LVR Prasad, sir, for proposing the vote of thanks. Thank you very much, sir.
Prasad sir, can I come in for 1 minute?
Yeah, please.
Yeah. So before vote of thanks, actually, I am also listening to Mr. Sankara carefully. Sir, this program, this IMP program also has undergone quite a change. Now we have designed to meet this program as per the ongoing needs for the cross-functional skills. So as one of the participants asked you, the challenges for the banking also poses challenges for the leadership. So the need for a broad skill set to constant for the senior level professionals who are required to continually adapt to meet the new age challenges is also very much essential. So theory 1%, by interacting with you, I think they have got some practical experiences. Thank you. Over to you,
Good evening, sir. After almost 4 years, I'm again listening to Sankara Narayanan in person. Of course, I had the fortune of working with him for almost 1 year under his guidance. I saw how he works. He's really a leader by example. One thing I noticed, which I failed to implement even today, is his table is always clean. Any paper goes to him, within 10 minutes, it comes out a decision. He's a terrific decision maker. He doesn't take much time. That is one of the greatest things that I have observed. He has created records in Vijaya Bank as the MD, and then it got merged with Bank of Baroda. Then he came to Canara Bank, and he oversaw the amalgamation of syndicate with Canara Bank. And because of his great guidance, we were able to do it a little more smoothly, is what I feel it. And being an alumni of AMP, it's much more great to be addressing the participants today. I'm sure that his address will be taken well by the most of the participants who will go on to occupy top positions in the days to come. In his speech, he has talked about PSB's profits are going, but challenges are there. He also told after nationalization from class banking to mass banking, we have moved. How NPA concept has come after Narasimhan committee has come in 1991, and net NPA and gross NPAs, how they are decreasing because of the good performance is being shown. He also told that earlier capital was not being given much focus and provisions were not there. Size of the balance sheet was the focus in those days. Then private banks came into being in the 90s. Then branch banking has shifted to bank banking with the introduction of CBS technology. he feels that sensible banking is what is required. Even today, nothing has changed. It is basic common knowledge. He felt 8th standard people are sufficient, but if they have got more knowledge, it is more skills. And if they use common sense, they can do logical thinking, they can do the work very well. So he felt that they should have all the participants should have a good knowledge of the products. Whatever may be the recruitment process, he feels that the training is required to be imparted. So technology, he feels, has a lot of advantages, at the same time some disadvantages. Earlier in the manual system, 80% of the efforts were going on for housekeeping, but now it is the reverse. But some dilution is seen in the housekeeping. While technology is excellent, it is enabled to increase the business and customer delight, but frauds are happening, he feels it. Banks are evolving, products are the same. We should not lose the should not lose the control over the operations, he felt that. So innovations are going to happen. He has quoted about 2-3 cases of very complicated frauds, how they have happened and how it was handled. Also, he has informed. Volume should commensurate with the profits is also what he felt. His advice to all the participants was decision making should be fast. No is also a decision making which everyone should implement in their working. Sir, I profusely thank him for taking out time from your busy schedule and come and address the participants, which I'm sure that will help them to enable them to make progress in their respective careers also. I also thank our CEO, sir, who is in fact going to Bangalore. He's in airport, but still he did not want to miss the session. So he came there. He is the guiding force who is always thinking ahead of the times and giving a lot of inputs in designing various programs. We thank him very much for participating even when he is in airport today also. I also thank all the participants of the AMP and alumni and faculty and other colleagues of IIBF who have come here and participated in this session. The question and answers, I also thank the participants for asking some relevant questions which are answered by our MD sir very intensely. But for the time, probably more participants would have asked questions. I also thank Dr. Thirma for, as usual, comparing with Grace. So I thank him for giving me an opportunity to propose vote of thanks. I thank all of you for participating actively in this session. Thank you.